Today I'm going to talk about a very important area, that is we're going to cover the entire syllabus in a quicker manner since the examination is just about to begin today. So let's begin with this particular session. But everyone, first of all, please share the session, like this session and subscribe to the channel right away if you haven't done it yet. So everyone, what is it that we're going to talk about? We have 35 units in our syllabus. So I'll try to cover it up all in a speedy manner. So let's begin with this part, everyone. And okay, here comes the first part, everyone. First of all, when we talk about the basics of accounting is basically what? Whatever happens in business is recorded there. Whatever happens in the business, matlab, when I talk about whatever happens in the business, that is sales happens, purchases happen, sales, purchases, or any of that sort, which are expenses and incomes, all those things that consist of a transaction. Sales is individual transaction, purchases is individual transaction. This is done in the form of recording. But we need to know the totals of each so that we can actually find out our profit. So what do we do? First of all, we classify or group these items in different groups. Then what we do is summarize. What we do is we make the profit or the loss. In this case, when the profit or loss has been determined, that is where the ultimate accounting work is done. The basic reason for preparing the books of accounts is to understand the financial health of the organization, right? So that's the accounting for us. Then everyone, there are something called conventions. Conventions matlab the practices which are followed in the area of accounting. What are the various practices, everyone? First of all, convention of full disclosure. Whatever happens in the business, you are supposed to tell everything. From a pin to an elephant, everything has to be stated to the shareholders regarding this particular area, everyone. That is the convention of full disclosure. Second is convention of materiality. Materiality means whatever is super important. This is an extension of full disclosure, everyone. Materiality means everything which is important. For example, you ask me that, ma'am, among all the papers, just let me know about AFM exclusively. Then I have to tell you exclusively about AFM, not about the other exams in JAIIB. Same case, if it's about, they're asking about only the profits, only the assets, then you have to be specific about it. That's called materiality. Next part is convention of conservatism. Conservatism is also called prudence. When we define conservatism, conservatism can be stated in this way, everyone. This is anticipate the losses but not profits. So in this case, what they say is anticipate all the losses of the organization, but do not anticipate the profits. Matlab, we are not supposed to record the upcoming profits, but yes, we are supposed to record the upcoming liabilities. Done. Then this is also called prudence. Conservatism and prudence is where the particular owner of the organization is very much scared about whatever is happening in the business. Okay, so he's always scared ki pata nahi whether I'll be having a good situation in the business or not. So till the time the profit doesn't materialize, I am not gonna note it down. Then comes the convention of consistency. Matlab, everyone, if I'm following method A, then I have to continue with method A. But that doesn't mean that I need not to change with the upcoming schedules. So if A changes to B, we have to change from A to B. If B changes to C, I have to go from B to C. That is what we have to think of. Now, this is where we talk about the entire area. This is where we have to bring the consistency. If we have to change, then the change that we have brought should be consistent too. There should not be frequent changes, because this will make our the entire books of accounts uncomparable with the previous years and even with the other organizations of that industry. These are conventions. Conventions are basically practices which are followed in the accounting field. Then comes the various accounting concepts. At least one marker question, or minimum 1 to 2 questions are asked from the area of accounting always. When we talk about the second part, it's called cost concept. Cost concept says, everyone, if I bought a machinery, then I'll be having a specific invoice of it, because that invoice shows ki yes, I have bought the machinery. So that is covered under the term objectivity. Then see, if I that machinery should relate to my business exclusively, its relevance. And that particular thing should be feasible. Matlab, it should not be something where I am telling you something unpractical or impractical, or that is not something which is possible there. So that is what we cover under the area of cost concept. In this case, cost concept says record everything as per the fixed assets, if specifically at the purchase price. If I bought a particular asset for 10k, the value of that asset is changing. I am not supposed to write down the market value that has changed. I am supposed to record everything as per the fixed assets. Matlab, as per the cost itself. Cost matlab the price I paid for that particular asset. If I bought a share, the price of the share is changing frequently. No, I have to record it at cost till the time I don't think of selling it. We have to record it present value, not any future value. Then unrealized gains are ignored. For example, I bought shares for rupees 10,000. By the end of the year, the value of these shares went up to 10,500. I am not going to record either the shares at 10,500 or the gain of 500, because this is an unrealized gain. Prudence doesn't allow us, and the cost concept doesn't allow us to record the asset at less than the cost value, or actually other than the cost value. Then comes money measurement concept. Always record everything in terms of money. You cannot record it in any other form. Then comes the business entity concept, which says, when we talk about business entity concept, it says that everything has to be noted from the point of view of business, not businessman. That means if I put money into the business, if I am A and I put money in A Limited, for A Limited, it's your share capital. Okay? So, Niharika and the company N Limited are not the same. They're two different things altogether. Right? Then we have realization concept. Realization concept says till the time you don't see something coming. For example, I made sales to you, I had given you a specific invoice of the same. That is where you become legally liable to pay me. Only then I should record that. So, realized or earned on the date when the property of goods passes to the buyer and he becomes legally liable to pay for the goods. That's realization concept. Dual aspect concept says, everyone, whenever we talk about dual aspect, this is debit is equal to credit. Whatever assets that we possess in the business, they are based upon the capital plus your liabilities. How do we define this? Capital is the money that we put into the business, and the liabilities, see, if I bought a particular laptop, I bought my laptop for 1 lakh rupees, say, my capital was 80,000, my own money, and the liabilities, the money that I took from others, is 20k. Okay? This is your dual aspect concept. Whatever you bring in the business is what you can spend in the business. Okay, next part is historical cost concept. The historical cost concept says record everything as per historical cost. Matlab, you should not be recording things just because the pricings are frequently changing. For example, every morning I cannot sit in my office and say ki probably my office today costs this much amount of rupees. If I'm not selling it, just keep it at the cost at which you bought it. So you should not be recording it at any other amount till the time you are not thinking to sell it. Now, next point is going concern concept. Till the time you are actually not saying it outrightly that this is the end of the business still continues to exist. Going concern concept says that men may come and men may go, the business is here to stay. That is why if I buy a car, I am strongly believing that my business is going to outlive the life of this car. If the car is going to be for 10 years, I'm going to have more than 10 years in this case. That is going concern concept. It means that a business continues with its activities as usual and transactions are recorded accordingly. By the end, that is 31st of March, I am ready to have from 1st of April, a new thing is going to start up. Then comes the area of matching concept, everyone. How do we define the matching concept? Matching concept clearly says all the expenses of the business when compared to all the incomes of the business. That is for 1 year. Matlab, if I'm talking about 2023, 2024, incomes for the year and expenses for the same year will give us the profit for this year. I cannot say that, pata hai, this year I think I earned 10 lakh rupees, but pata hai, out of this 5 lakh is for previous year. So this is not my exact amount of profit I earned during this year. This is the profit I earned in the half part is for the previous year and half part is for the current year. So that doesn't make sense. Next part is accounting period concept. This says we have everything. See, if I have to study the entire book, I cannot study these 35 units altogether. What do? We divide this particular book into different chapters. If I want to study a particular organization, I cannot study throughout from the day it was made to the day it is ending. I cannot read the particular organization's financial statements in one go. What will I do? I will divide it into uniform intervals of 12 months, starting from 1st of April to 31st of March. Even if you start your year on 30th of April, first year, the first year of your business starting. If it is on 30th of April, you are starting your business on 31st of March, it is going to end. From the next year, you are on the uniform basis. So it's not like that you are going to be starting your business on a certain day, the business will end on that day accordingly. Nahin. For everybody, it is from 1st of April to 31st of March. For internal reporting, you can have the specific area of quarterly reports. For example, listed companies are supposed to give their quarterly reports to SEBI. Even RBI asks the banks to do the same as well. Everyone, now comes a very important area. There are two different kind of standards. One is GAAP, Generally Accepted Accounting Principles, and IFRS, International Financial Reporting Standards. So these are two different areas. The full forms are given here. What is the difference between the two? This is exclusively used in US and this is for international level everywhere. Assumption, this is not well developed and this is accrual and going concern. This is one particular area. They're clear. IFRS is more detailed. Okay? It is, if we talk about the fixed assets, they follow cost model. You bought at what price, you follow that price. But when you talk about IFRS says that after a certain period of time, you should revalue your asset. Whereas it makes sense. If I bought a particular plot of land in 1980s, I would have bought it for maybe 1 lakh or even less. But value of that 1 lakh today is more than 1.5 CR to 2 CR normally. That means I should be recording things whenever there is actually requirement of an update. Then in terms of inventory, GAAP follows everything, LIFO, FIFO and even weighted average. But IFRS and even Ind AS and even AS, they do not really give that much respect to LIFO because LIFO has some problems. The presentation goes a little haywire if you're using LIFO. So they use only two methods, FIFO and weighted average. What's LIFO and FIFO? LIFO is last in, first out. What particular stock came last would be out first. That means the one which was brought first would be going by the end. Okay? This is LIFO and one is FIFO. First in and first out. Okay, now comes very important rules of accounting, which is called the golden rules of accounting. This is as per the traditional method, also given by this is also called English method. Golden rules of accounting. Normally one particular question is always asked from this area as well, everyone. What are the various golden rules of accounting? Number one is real. Real is basically for all the assets. All the assets are defined under real account. Assets are something which helps your business to grow. For example, if I am into the industry of edtech, my phone is my asset because that connects me with multiple people. The laptop that I use, the camera that I use, it helps me to earn. I do not sell these things and earn. I earn through these things. There's a difference between the particular terminologies, na? So that's how we define this part. So assets are defined as something which helps your business to grow. Under this, they say debit side, what comes in, and credit side, what goes out. Whatever comes into your business is on the debit side. Whatever goes out of your business is on the credit side. Then comes the next part, everyone, that is your personal account. Personal account means the account which says this is related to the persons. For example, you and I, we are natural persons. If I talk about company, banking company, HDFC, SBI, all these are artificial companies. And last is outstanding expenses. I am supposed to pay salary to Mr. X. So in this case, salary is important for the business to note down, but it relates to Mr. Gopal. So that means I should record the term salary because auditor is going to ask me who is Gopal. I'll have to say he's my employee. So that is why I have to record the particular term salary. So in this case, the amounts that you're supposed to be paid to anybody, you have to focus on the nature of it. That is your personal account. That is debit the receiver, credit the giver. That is why capital is on the credit side, because businessman gives money to the business. So that is how we define C for capital, C for credit, D for drawings, D for debit. Because in this case, you are taking the money out of the business. That is, you are being the receiver. And in terms of introducing capital, you are the giver. Then comes the nominal accounts, everyone. Nominal account is for the expenses and incomes. Okay? How do we define these? Debit all the expenses and losses, credit all the incomes and gains. That's the rule, everyone. One of the basic rules that I follow, there is one Indian version that we have made. That is my simple way of learning. How do we look forward towards any journal entry without any trouble and with 90% accuracy? I won't say 100% because this doesn't apply on every particular journal entry, but most of it. Always follow the cash. If cash comes, on the debit side, cash goes out on the credit side. If you follow the cash, the remaining journal entry or remaining part is easier to find out. For example, I purchased goods and paid cash. What do I do? In this case, I'm losing cash on the credit side and I'm getting goods. So goods comes on the debit side. That's how we define the golden rules of accounting. Next part is called cash, and when we talk about the cash here, cash is sometimes noted in the journal, right? Normally we take individual transactions of whatever happens in your journal, but sometimes what we do is we do not follow this part. Sometimes what we follow is, if we talk about the cash there, we are following the cash on the basis of a specific notebook is created. That book is called subsidiary book. Okay. Acha everyone, one part is I record everything in the rough notebook and then I write it down in my different English notebook, maths notebook, science notebook. One is I directly note it in my fair notebooks. Noting down directly in your fair notebooks is covered under the term subsidiary books. When we talk about cash book says record every journal entry which has cash directly into this. If it is only about cash, then single cash book. 2-column cash book means it says cash plus bank. And 3-column cash book says you record cash account, bank account along with discount account in this particular book. Everybody always remember, in terms of cash and bank, they are real, right? Their debit what comes in, credit what goes out clearly applies on this. But what about discount? If I receive discount, it will be on the credit side. If I give discount, it would be on the debit side. Okay? Next part is petty cash book. Petty cash book matlab which records those minor expenses that happens in the business. So simple petty cash book talks about the specific area where we are noting down tea expenses, the refreshment expenses, XYZ. They are under just written in the nature. And when it becomes more analytical and all the specific expenses have their respective heads, then we call it columnar petty cash book. Okay, everyone, to where is human? So when we talk about a human doing any kind of accounting, he can definitely make some errors. So when he can make some errors, what do they do? How do they solve these errors? So they have this particular accounting called the rectification of errors. When you make errors, it is high time that you look forward to it. Acha, before I proceed further to this, what is the specific method of accounting cycle? Do you remember that part? Whenever you start your business, you record everything individually. That's called journal. From journal, everything goes to ledger. Okay? From ledger, everything goes into trial balance. And from trial balance are the financial statements made. That is your P&L and your balance sheet, everyone. Okay? That is how we define our books of accounts. Then, how do we look forward to this area, everyone? In this case, there are different types of errors. One is those chotu motu errors which are done while recording. They are called clerical errors. For example, error of omission. I forgot to record something. If I forgot to record it completely, matlab debit and credit side both, this cannot be traced anywhere until or unless auditor comes and finds the particular transaction. So this does not affect the trial balance. But if I record it only on the debit side or only on the credit side, this will affect my trial balance. So in this case, partial will always affect it. Either you have noted on the debit side or the credit side. Matlab one part of the journal entry is not recorded. Next part is error of commission. Everyone, Mr. Ram noted in the name of Mr. Sham. Maybe there was 10,000 rupees written, we wrote it 1,000. Such kind of errors are covered under error of commission. Even undercasting and overcasting. Undercasting matlab I was supposed to fill the particular glass up to the brim, but I did was I put it only half. Matlab any account was written for a lesser amount of value. That is called undercasting. When it is for more than the particular amount, it is called overcasting. Then comes compensating errors. The errors in which we find out that the debit side and the credit side both are ultimately matching because I made a mistake on the debit side and same amount mistake on the credit side. This is something which is very hard to trace until or unless auditor comes down and checks it out. Okay? Then comes principal errors. Everyone, expenses and assets both are on the debit side. Sometimes we can get confused over the area. Okay, what should we do about that area altogether? And since we don't know about what is going to happen, in this case, principal error says debit side items mixed up, expense as an asset, asset as an expense. They are covered under principal errors. And as I told you, one side error and two side error. Any error in which the journal entry was incomplete, then that particular account will lead to, since we have to make sure that the debit is always equal to credit, you make a dummy account which is called suspense account till the time your account is not solved. Okay, that particular mystery is not cleared. Why is there a difference coming up? Then we have to look forward to the area of suspense account. Okay, a very important chapter that is called depreciation, everyone. Uh, is this visible now? The chapter is called depreciation. How do we define depreciation, everyone? Depreciation is the reduction in the value of that asset. Because of what reason? The value of an asset declines because we use it, wear and tear, time passes. Everyone, the previous models have a lower value than the new models. Obsolescence, technological changes, accidents lead to a particular situation where your machinery becomes less valuable and fall in the market price because new models are coming up, old models are losing their value. That is fall in the market price. How do we look forward to it, everyone? There is something called journal entry there. Under journal entry, everyone please remember depreciation is a non-cash expense, an expense in which we do not have any movement of cash. For example, I bought my phone. As soon as I opened the phone, there is a reduction in the value. Overall, the value of the phone goes down and down with every single year of use. That means my asset value declines. Debit all the assets, and in this case, what did you say? Debit what comes in, credit what goes out. Your value of asset is going out, and the reason is depreciation, which is a loss. Okay? It is also called a non-cash expense as such. And everyone, if I do not record it in the asset and we record it as a particular amount कि देखिए it is going down and let's save the similar amount, then we make a provision out of it. So you take your depreciation and transfer it to the provision account. What are the various methods in terms of depreciation? If the same amount of depreciation is to be charged every year, then we use straight line method. SLM, also called fixed installment method, also called original cost method. Under this method, what do? If the value of your asset is 1,20,000, everyone remember installation cost is also a part of your cost, because without paying the installation, you cannot use that asset. So if there was a specific amount of 10,000 there, the installation cost, then minus scrap matlab by the end of the life of that asset, if I sell it for 30,000 everyone, and the maximum I can use it, this is called depreciable value. The value of that asset is 1,40,000, okay? 1,30,000 minus 30, that means in this case the value of the asset is 1 lakh, and the depreciation is going to be divided over a period of 10 years everyone. So in this case, can I say every year there should be a decline of 10,000 per month, per annum? In this case, even by the end, they have a specific area and they have a specific asset, and they can claim the depreciation, you know. Then WDV method. In this method, the amount, under SLM method, everyone, the value remains the same. Whatever you find out, this 10,000 is the depreciation that you will be charging till the end of that life of that particular asset, everyone. That means 10,000 would be there. But what happens if I use WDV method? Under WDV method, whatever closing value we have, for example, if the value of that asset is 1 lakh, first year depreciation was 10,000, you use the percentage method. Now you're left with 90k. Then the next year 10% should be on 90,000 instead of 1 lakh rupees. It should not be on the original cost but the closing value of the previous year. In this case, it is called WDV method, everyone. Okay? So in this case, the closing value of the particular asset would be considered for depreciation in the upcoming area. Then we have the units of production method, everyone. Units of production method says that the more you use the asset, the more would be the depreciation. If I use the method, okay, you find your depreciable value, take whatever your depreciable value is, then you multiply it by how many units you have produced this year divided by total produce. For example, if I can produce maximum 10,000 units, so you divide by 10,000 units, how many units you produce this year? 2,000. So your depreciation is going to be 20% based upon purely your usage. That's called units of production method. Next method is called sum of years digit method. Under this, whatever your depreciable value is, in this case what you do is you take your depreciable value and how many years are left. If I use it for 5 years, then how many years are left when we talk about the first year? Then 5 are left, then 4 are left, then 3 are left, then 2 are left, then 1 are left. Okay? Basically, we have been given these 6 are the specific this, for example, though that 5 number denotes the number of years that asset can be used. So in this case, that particular amount, how many years are left in the very beginning, divided by sum of digits, 5 plus 4 plus 3 plus 2 plus 1 has to be considered there. Okay? This particular amount has to be considered to find your depreciation as per sum of years digit method, everyone. Last is called intangible assets, the assets which are amortized. Okay? The assets which are amortized are covered under this area. Amortized matlab all the intangible assets normally amortize. They do not depreciate, rather they amortize. This is to be covered into the specific area altogether. So amortization is for intangible, and for tangibles we have for tangibles what we have is for tangibles we have depreciation. For intangibles we have amortization. Everyone, another important topic is called capital versus revenue expenditure. If I buy a phone and if I buy a SIM, what's the difference between the two? The phone that I'm gonna use is gonna be with me for years till the time I don't decide to sell it off, of course. While if we talk about the recharge is gonna be over within the period of maximum 2 weeks, or maybe it's for a month, or maximum 3 months, or maximum 1 year. So any particular expense that you do and the benefit is reaped within the year itself, that is called revenue. Something which you spend at this point of time, but the benefit can be reaped for number of years, that's called capital expenditure. For example, this is for long term duration. If I buy a car today, it's a long term investment, it's a capital expenditure. And if I spend money on buying a normal pen, everyone, it's a revenue expenditure. So, long duration benefit, non recurring in nature. I do not buy a car every day. I wish I could, but ultimately I cannot buy it every day. And this is under balance sheet because it's gonna be an asset. You know? Then when we talk about revenue, this is day-to-day expenditure that we do. That is, this is recurring in nature. If I buy a car, or if I purchase goods there, goods purchasing is my daily basis wala work, not something which I do once in a year. This is my daily basis wala work, you know, that is covered under the area of everyone revenue. Short duration benefit, it is recurring in nature and shown in the profit and loss account either as an expense when we spent or either as an income. And the next part is for the capital, everyone. If I talk about the capital area, in this case it is what? The capital expenditures which are done today. It's going to help the future. So in this case, that is to be covered under the area of balance sheet. Okay? Then when we talk about this specific area, in this case, what will happen? The capital expenditures are those expenditures that you do for a longer period. So it goes into the balance sheet itself and you have to specify it altogether. That this is an expenditure that we did in order to run our business, or in order to do this or to do that. Okay? Done? Done, everyone? Chaliye. Now let's move on to the next point. These are the financial statements of any organization. How do we study the financial organization and their statements? First of all, you look at the financial statements. First is your trading and P&L. Okay? And the second is your balance sheet. In terms of trading account, you record exclusively your production area. So how do we produce, everyone? First of all, I have an opening stock of say 10,000 units. Then I bought goods for rupees 30,000 further. Then I spent a few little thousands, couple of thousands, let's say I spent 5,000 in order to make that particular asset worthy of use. Labor is gonna set, let's say the expenses is gonna be there, right? So overall, I have spent 45,000 rupees on this business, but by the end of the year, I still have 5,000 rupees ka stock which is left. That means how much did I consume? 40,000 units are consumed during the year. And when we know that this is our cost, okay, cost of goods sold is given, and if I say that the business, the particular sales in this year, this is your cost of goods, goods sold, your goods sold are for say 2 lakh rupees, and in this case the particular cost of goods sold come out to be 4,000 less, and then it would be 14k. Trading account says record all the things on the basis of either the production area, or when we talk about it, trading account normally records the things that we purchase and then sell. That is to be covered here. Done, everyone? Then comes the profit and loss account. If you're looking only at the inventory, expenses and incomes, then it is trading account. Then when we talk about the profit and loss account, it's an office area altogether. In this case, there would be there would be expenses noted down, there would be incomes noted down, and when you compare both of these, you get a profit or a loss, and you record it in that manner. All the companies prepare is either provided in the Companies Act 2013 or Banking Regulation Act or some other acts for specific types of companies. So profit and loss account is basically the account which records expenses and incomes. Done, everyone? This is how we define your trading account, and then you are followed by profit and loss account. Profit and loss account records only the indirect expenses. Done, everyone? First of all, we are done with trading account. Second, we are done with profit and loss account. Profit and loss account records all the expenses and incomes which are not direct or production based. Everything else is taken into the area of the profit and loss account. Everyone, if I earned a profit of 10,000, then what will happen? Done, everyone? Last part is your profit and loss appropriation account. If you have a partnership firm, you made 10,000 rupees, then this 10,000 has to be divided among the various partners, right? Then when you have to distribute your profits among different people, then you create P&L appropriation. This is used to provide dividend distribution tax, that is your DDT, or then is adjusting to income tax, and it is also transferred to the reserves. This is the surplus money that we have got, and this should be taken towards your reserves. And here comes the next part, everyone, when we talk about the specific area of a company. How do we define a company, everyone? Everyone, how do we define a company? Company is covered under Companies Act 2013. है ना? चलिए, let's talk about it further. When we talk about a company, company is covered under Companies Act 2013. What happens in this case, everyone? Companies are covered under Companies Act 2013. Okay, so in this case, how do they define the company? Company is basically an organization which is an artificial person. Of course, it is not a legal, that is not a natural person like you and me. It's a separate person which is based upon group of money, giving them money. They are called shareholders, and they get the ownership of that organization. These organizations are actually created, and you prepare the papers, and then you go to registrar of companies, ROC, and you get this part done, everyone. That is how we define the incorporated association. Okay? And in this case, obviously a company cannot sign. So if the company cannot sign, then one of the whole time directors and a particular other director, both of these can sign on the documents to make sure that this shows the authenticity of your books of accounts. And when we talk about common seal, overall it is basically the particular point where when we define the specific area of this common seal means signing on behalf of the company, which is done by whole time director and one particular director overall. Then in a particular company there is a limited liability. If I said that I'll invest 10,000, then not even a single penny further can be asked by the company for me to pay. It's a limited liability, everyone. Then comes a company as a perpetual succession. The life of the company is long term. We do not assume that it's going to be for a specific period of time until or unless their association, that is memorandum of association and articles of association, their internal document states anything. In this case, your management and the owner, they are two different people, correct? Your shareholders are your true owners and managers are the people who handles it. Then there's a minimum paid up capital in companies. The वैसे तो in 2013 it has been removed, but overall still stated that the total minimum capital for a private company is 1 lakh, for a public company is 5 lakh rupees. This used to exist earlier, but after the application of Companies Act 2013, this particular thing has been removed. There is no specific minimum amount. Transferability of shares, that the person can give the shares to anybody provided they are following the rules of that particular organization, right? Then separate legal status. Of course, when we talk about it, when we say that this particular thing is absolute, see, when we talk about the legal status, a company is having a separate PAN card. The company operates on its own, so that is why we say it has a separate legal status. And then comes large members, everyone. When we look forward towards the area where we have large membership that exists only in the area of public companies. Okay, public companies, anybody can be a part of it, while private companies, only specific people who have bought the particular shares of that organization, only they can be a part of this particular area. Okay, that is what we define under the area of companies features, everyone. Any doubts in this area? Done? There are different types of companies. This has been asked in the examination, even in the last attempt. There is something called chartered companies, the companies which are under the name of the Queen. East India Company was one of the companies which was prepared under the name of the Queen, everyone. These are called chartered companies. Then comes statutory company, the company which is formed under the statute or under the law. For example, SBI is formed under a specific statute. LIC is formed under a specific separate act. Then comes registered companies, the companies which are covered under the Companies Act 2013 and registered under its name or any other act which existed before that. वैसे the previous act was 1956 Companies Act and there was a Companies Act by dated way back. ठीक है, so even before the independence there. So there were points, but then ultimately it has been overall simplified, and that is how they prepare this. Done, everyone? When we define the specific area of registered companies, the companies which are registered under the Companies Act 2013 are called registered companies. When we talk about the foreign companies, the companies which are not registered in India are covered under the area of foreign company. Based upon the ownership, the basis of your ownership can be either you can be a part of it or your close people, then it's a private company. If it is registered under SEBI and anybody can be a part of it, then it's a public company. When a company is having more than 60%, actually more than 51%, 50% or more in a company, if you have, then you become the owner. So that is why when we talk about the government organizations, if you have a particular shares of the government organizations, then the chances of increasing it further increases. Done. That is how we define the area of a government company. Then comes a holding company, a company in which you hold more than 50% is called a holding company. The company which is being held for more than 50% of their voting power, which agree to this part, that particular company is your subsidiary. Done. That is how we define the holding company. A company which has more than 51% of its shareholding in the name of one particular organization, which has got more control. That is called holding company. On the basis of liability, if I say I'm going to give 10,000 rupees, that's the maximum I can bear with the liability, then it's called limited liability partnership, a limited liability company there, but in a certain manner, everyone. The company is limited by the shares of the organization, the one which has more shares and which has less shares. That is how we define the area of company limited by shares. Matlab we define 10,000, 20,000, the number of shares based upon a bundle that you create, that one particular for example, you have a paragraph there, है ना? If that particular paragraph is to be seen, you study that paragraph altogether. Sometimes it becomes very difficult, so what do? You disintegrate. So if in this way you have to disintegrate, first of all you think about the first term. Done. That is how we define the company which is limited by shares. 10,000, 20,000, whatever number of shares exist. We cannot exist by not following this part. If we do not believe in shares, what do? We take loans from bank and utilize it exclusively in our business, which is definitely more challenging, right? Then that is called limited by guarantee. Someone just gave a guarantee, if something happens, then we'll take care of this person. ठीक है? Done, everyone. That's how we define it. And the company which does not follow the rules of accounting, then it's called, when the company does not follow the rule there, that they have limited liability, or then if they do not follow the Companies Act provisions, then they are converted into an unlimited liability company. If the company dies, anything can be sold or related to the company in order to recover the funds. That is how we define these kind of companies. So there are three different types of bases: incorporation based, and then we have talking about the ownership based, and the last is based upon liability. Everyone, next part. Okay, the next part is when we talk about the limited liability, liability and company and a partnership. Under partnership, the paper formation, the papers exercise is very easy. Under company, there are lot of formalities. Here, the registration is not compulsory for a partnership. For a limited liability company, they have to register themselves under Companies Act 2013. A partnership can have minimum 2 members, maximum 10. वैसे normally it goes up to maximum 20. ठीक है? Banking companies 10 and others is 20. When we talk about a private company, it goes up to minimum 2 and maximum 200 members. And a public company. Public company matlab this is listed on SEBI there, share market, and anybody can put money into this organization. For these, minimum 7, maximum uh, unlimited. You can have unlimited members. If this particular company which has this option of raising the funds from random public as well, then if they choose to do so, then it becomes a listed company. Otherwise, it is a public company. Under partnership, their liability is based upon the fact that the partnership can face losses, can have profits. So if such a thing can happen, any specific amount of loss is recovered from the people itself. It's unlimited in this case. While it can be limited to the face value of the shares. When we talk about the area of liability, everyone, limited liability matlab if I gave 10,000 rupees to invest in the company cannot ask me even a single more penny. Okay? Everyone, here comes the different types of shareholders. पता है? When we talk about the shareholders, who are the people shareholders? Shareholders are the people who invest funds in an organization. So when we talk about these people invest their funds in the organization, how does it happen? First is authorized capital. The permission has been taken from the ROC, Registrar of Companies, to invest in these organizations. The maximum money as per the permission that you can raise is called your authorized capital. The part of your authorized capital which can be used, which can be issued to the people. For example, I took permission from the ROC that I would like to raise maximum 10 lakh rupees. So I issued hardly 5 lakh to the people right now. I offered them, okay, everyone, do you want shares? So I am putting up 5 lakh rupees, 5 lakh worth rupees shares in front of you. If you want, then please proceed and take up the offer. If these people agreed ki yes, I want to take up the shares, they will subscribe these shares. Then everyone, the next part is called up capital. Called up capital matlab the capital which we are calling matlab we are actually asking these people to pay ki sir, you have taken the shares, now where is the money? When they ask for the money, it's called up capital. Everyone, the portion of the capital where the person is supposed to pay is called paid up. Matlab the person has paid. When we ask them ki sir pay, that is called up capital. And when these people pay, that it becomes the paid up capital. The shares can be issued at a premium. Matlab if the normal value at par is rupees 10, share value is rupees 10, I can ask the company can say, dekhiye, my company has a name in the market, so my share should be definitely of 12 rupees or 14 rupees. The extra 2 rupees or extra 4 rupees is your premium. And a share can be issued at a discount as well. That means a share worth rupees 10 can be issued at rupees 9 or 8, though this thing is practically not there anymore. Okay, but since it is given in the book, so we are gonna consider it. Next part, if there is any default in terms of this particular process, the company or any officer who is involved has raised amount, or whatever your the raised amount is there, or if there is more than or 5 lakh rupees, whichever is less would be implied as a penalty on them. And everyone, if you issue the particular amount to the people and they do not take it up now, so then you have to refund all the money that you have taken up, plus if you are late for that, then you have to pay 12% extra. Okay, पता है वैसे ना, there are certain shares that we give as a reward to our shareholders, to our employees. Those people are directors who have given a lot of hard work towards the organization. Then we say, since you have put a lot of efforts for this organization, we will give you a reward, that is, we will give you sweat equity shares. That sweat means basically your for your hard work, we are going to issue shares at a lower price than actual. Then we have employee stock option scheme. We put this for all the people who are a part of this organization for years. So we issue ESOS, employee stock option scheme. Under the scheme, what happens is we issue shares. We actually allow them, we offer shares that after 3 years you can take up these shares. So after 3 years, if they come up and say yes, I want to buy the share, and that too this share is available at a price which is lower than the market price, that's called employee stock option scheme. You put the offer in front of the employees that do they want to become the shareholder. If they say yes, then these shares are available at a lower price than actual. Next part is your forfeiture. Forfeiture means if someone is supposed to pay, I'm supposed to pay 10,000 rupees. Then for the shares, if I said that I be paying 10,000, but out of 10,000 I paid 6 and remaining 4 I didn't pay. So the portion that I didn't pay is gonna create a little trouble. What is the trouble, everyone? The organization will keep on asking, Niharika ma'am, please pay this pending amount. If I do not pay the pending amount, then I will not be a shareholder anymore. My amount in the particular share, the organization, will be removed altogether. I will no longer remain the shareholder of the company. That is, the money that I've already invested in the company would be taken away from me, and then they'll say this 6,000 now belongs to us and you are no longer a shareholder of our company. That means forfeiture. The amount paid by a defaulter shareholder would be kept by the company. That is covered under the term forfeiture. Forfeiture shares. Everyone, here comes the different types of shares again. These kind of shares are bonus shares. When you give shares to someone for absolutely free, you already have 10 shares. If you have, for every 10 shares you will get one share. For example, Mr. X has 200 shares, and then for every 10 shares, that means a set of 20 is there, he will get one share. So company is giving 20 shares to him absolutely free. Wait, this is not free. The portion of the profits which the company kept on accumulating and didn't give as a dividend to their shareholders was becoming bigger and bigger. They said from this accumulated amount, give the shareholders a specific benefit. That is, you give them money, you give them shares. So that means you use your free reserves, your security premium account or capital redemption, the specific reserves or your general reserve, to convert the accumulated profit into free capital to the shareholders. Everyone, non-equity shareholders, ठीक है, non-voting equity shares can also be there. Only 25% of the paid up can be like this. Normally equity shareholders have the right. Preference shareholders do not have any voting right until or unless the company failed to give them a dividend for continuously 2 years. After 2 years, they also have the voting right. Otherwise, nobody has a voting right other than equity shares. Then both the private and the public companies are allowed to do this. Not permissible to convert voting to non-voting. If you have a voting right, you cannot give away that particular right. Okay, here comes the next particular topic, everyone. This is called cash flow. Cash flow is covered under AS3 and Ind AS7. AS3 and it is also called under Ind AS7. How do we define cash flow, everyone? Cash flow can be defined as a specific area where in an organization what happens is, when we talk about the cash flow is where we record exclusively the movement of cash. If cash is coming in, it's inflow. If the cash is going out, it's called outflow. When we talk about cash flow, it is divided on the basis of 3 different categories. First is on the basis of the regular income which they make, it's called operating activities. If we talk about, this is not regular, this is when we talk about their investment. That means, okay, operating activities is their regular activity based working. In this case, what do? They sell goods, they purchase goods. All these things are covered under operating activities. ठीक है. if there's a decrease in account receivables, मतलब I am supposed to receive money from these people. Crux is, if you receive money because you are running your business, that means your sales, if you are having sales, then it's a plus. If you are purchasing goods, then there is a minus. Operating activities is your business activities giving you money or you are losing money because of that. That is called inflow or outflow of cash. Next part is investing activities. This is from your regular business. If I sell a long-term asset, I will gain funds. That means then we'll have inflow. If I sell the long-term funds, I lose money, I gain money. And if I purchase an asset, then what will happen? I will have an outflow. Okay, that's called investing activities, everyone. Next part is your financing activity. Financing activity means the money that you are getting because you got finances from outside. So that means this is the source of your fund. Okay, you arrange your funds either from shareholders or debts. Okay, that is to be covered under financing activity. If you pay dividend to shareholders, it's a outflow. If you increase your equity, you get equity shares, it's a plus. If you have decrease in borrowings, matlab everyone, decrease in borrowings. If I had 10,000 rupees ka loan, now it is hardly of 8,000. That means that 2,000 rupees ka decline is your repayment, and if it is your repayment, it should be a minus. So operating activities, day-to-day activities, if you buy or sell a long-term asset, it's covered under investing. If you arrange funds for your business on long-term basis, your shares or your debentures or your loans, they are covered under financing activities. Crux is, if you have money coming in, it's a plus, money going out, it's a minus. In this case, we study the movement of cash and cash equivalents, everyone. How do we define them? Cash and cash equivalents, if you receive cash, it's a plus. If you lose cash, it's a minus. If you have bank balance, it's a plus. If you lose bank balance, it's a minus. Then we have something called fund flow, everyone. How do we define the term fund flow? Fund flow is basically overall the study of funds. Rather than just limiting it to cash, we are expanding it and talking about funds in this case. Then how do we define sources of funds and uses of funds? If you arrange funds for your business for long term basis, it will increase your long term liability, but in this case you also get money. That's the important part. If it is short term, then this will increase your short term liability. Everyone, there is something called decrease in non-current assets. When we define, see everyone, sources of funds from where we arrange funds, okay, and the uses of funds where we use those funds. It can be long term, will decrease your long term liability, or in terms of this, everyone, acha everyone, what do we say in this case? But the crux of fund flow is, if your current asset increases, then your non-current asset or non-current liability should be there to cope it up with. For example, if a transaction says acha theek hai, increase in long-term liability, everyone, what happens is I took a loan. In this loan, what will happen? Cash will increase, a current asset is going to increase, and my loan is going to increase. Can you see, one part is long term, one part is short term? That's the crux of fund flow. One particular element should be long term, one particular element should be short term, only then it is considered as this area. Otherwise, if both are short term, it's current assets minus current liabilities. This is called net working capital. Okay, so when we talk about long term things, increase in long term liability, and the opposite is decreasing non current assets. If you lose your current non current assets, it's gonna be there, and in this case you are arranging funds for your business, or when we talk about your current assets are decreasing, your money is coming inside the business. For example, I sell inventory, I get money. Opposite happens, increase in current assets. If you buy current assets, you lose funds. Then if you increase in your current assets, then obviously you are buying stock, again you are losing funds. So you just have to follow lose and gain of funds, provided in that particular transaction one element has to be long term, one element has to be short term. If both of these things are there, only then it is considered under fund flow statement. If it is only both current, then it is net working capital. Both non-current are not a part of fund flow. Okay, everyone, next particular topic is bank reconciliation statement. How do we define the bank reconciliation statement, everyone? BRS can be defined as a specific area. When we talk about BRS matlab the cash and the bank balance is not matching at all. Why doesn't it match? It is not matching because of one specific reason, that we have a specific problem, that there's a timing issue. What happened is, our cash book made mistakes, like cash book has undercast, matlab I recorded less transactions, or over, I recorded an amount over and above the actual. That shows wrong balances. This is called error of overcasting and undercasting. Something which is less than it should be and something which is more than it should be is covered under overcasting and undercasting. Entries which do not require change in cash book, everyone. The entries which do not require changes are, see, if you, there is a timing based errors. if I deposit a check today, it's not cleared. It's a timing based issue. So this doesn't require any change there. But we have to just find out that these differences are the reasons my cash book and my passbook is not agreeing. Right? Then comes entries which require change in cash book. When we actually say, array, cash book actually made a mistake due to which it is not matching the passbook. For example, I came to know about the bank charges later. So if I came to know about the bank charges later, I haven't recorded it. Interest on saving bank account, again, I receive it till the time I don't get the update over it. Cash book is never updated. Passbook is always updated. When you come to know about your bank charges, it would be a minus. If when you come to know about your interest on saving bank account, it would be a plus. When we talk about interest on overdraft, everyone, when we have an OD, that means in this case interest has been charged from account, it's a minus. Amount collected by bank on standing instruction, they took the money out of my bank, that means my cash book has to update itself and has to do a minus. Bank amount paid by bank on standing. Achha everyone, if collected by bank, for example dividend collected, then it would be a plus in my cash book. है ना, money is coming into my bank account, so it should be a plus. If money is going out, for example my Netflix payment is being deducted from my bank account automatically, it's going to be a minus. Direct payment is which is made, someone paid directly into my bank, it's a plus. Then dishonor of a check, someone I thought that would be giving me money and my bank account will go up, but in actual it didn't, so it would be a minus. Now comes the next topic, which is was bank reconciliation statement. Always remember, think like a banker, and in this case cash book and passbook has to be compared and find all the differences. And if you are starting from cash book now, do whatever a bank would do and reach to the balance of passbook. Normally these are the differences which comes in the examination there. Okay, next part that we talk about is the area of bills of exchange. Bills of exchange is covered under Negotiable Instrument Act 1881. What happens in this is, everyone, I was supposed to pay money to you. I am your debtor and you are my creditor. You said that, Niharika ma'am, I personally do not know you, so I want a written document. So in this case, I order you to pay this much amount of money after this much amount of time. When I will say, okay, this is accepted, so in your case it's going to be a bills receivable, that you are supposed to receive money from me. You are the drawer, I am the drawee. You can always ask anybody else to receive the funds because ultimately you are the one who drew the bill. So you can ask me to pay to anybody. So it is the payee can be either you or anybody whom you choose, but remember it's an unconditional order. Then we have the promissory note, everyone. How do we define a promissory note? In this case, the debtor promises, this party promises to pay, and this is an unconditional promise, that I promise you to pay this much amount of money after this much amount of time. One party is the maker or the payee. Then check. Check is also a negotiable instrument. I can issue it on anybody and it can be bearer as well. है ना? So there is no acceptance required. It does not require a timestamp. In this case, there is a stamping required. You go to the court and get the stamping done. That is a legal document, everyone. Okay? Then it is payable on demand. Again, but there is a specific life of an asset. For a check, it's 3 months max. है ना? Acha, one more important thing, everyone. If the bill is for 3 months, okay, for example issued on 1st of January, so remember, if it is issued on 1st of January, then January, February, March, on 1st of January entire, February entire, and March entire. That means if I look at it after 3 months, what is gonna be, that is whereas 1st of April should be the due date. No, add 3 more days. So this becomes 4th of April is your due date, provided this is not a public holiday. If it's a public holiday, for example, if the due date is on 15th of August, then do a -1, everyone. It should be 14th of August. And if we talk about a declared holiday, all of a sudden the holiday is declared, then you go one day further. That means that it would be 16th or 17th depending upon the day. Then comes honoring when you make the payment. When you do not make the payment, it's called dishonoring. Bill sent for collection, you can actually give the bank a responsibility to collect your amount and put it in your bank account. Sometimes a creditor can come to you and say, Niharika ma'am, give me my money. I can say, sir, I do not have money. Can I give you a bill receivable which I was supposed to receive? He will say, okay, and then I'll give that bill to them. That is called endorsement. Then we have bill discounted. I can actually sell the bill to the bank, but bank will never give me the entire amount. They'll be like, if the bill is for 10,000, give me, I'll be giving you 9,500. 500 is my money that I will earn from this transaction. Then, if you make the payment before time for a bill, it's called retirement. If the person doesn't pay, the holder of the bill will get it done from the court. Yes, this party hasn't paid. It's called noting charges. Two parties who do not have any money owed to each other, they actually come together and say, Chalo, let's make a bill receivable. A says, I will issue a bill receivable on you, and whatever money comes, we will use the funds, and once we have used the funds, we will give this money back to the bank. What happens is, A has got a bill for rupees 10,000. They just created it for the sake of it. And A went to the bank, sold it to the bank that after 3 months, B will pay this amount. So bank said, okay, A, you will get 9,500. This 9,500 is for 3 months. So within the 3 months, A and B will use the funds. For example, A was supposed to use 4,000, B was supposed to use 5,500. They will use their funds accordingly, and after this particular time, what will happen, everyone? The bank will do what? The bank, in this case, the after 3 months, bank will go to B and say, B, give me money. So A and B collectively will collect this 9,500 and pay back to the bank. They just created a fake, I would say, fake asset, that is your bill receivable. They both enjoyed the funds, and after 3 months they gave the money back to the bank. So if you do not have a specific way of asking for loans, then people go for this. That is why they are trying to help each other. That is why it is called accommodation bill. Done, everyone? Now comes the next part, that is called the area of bank audit. How do we define the bank audit, everyone? Bank audit is basically the auditing that is to find out true and fair view of the books of accounts. In this case, the particular books of accounts are reviewed whether they are true or not for any frauds or anything else. Concurrent audits are those audits which are done on a monthly basis. That includes continuous audit. It is done every month. External people will come. Those are called ICE. They are the members of ICI. The chartered accountants do it, and it's on monthly basis. You sometimes prepare your own people to check the errors first before the outsiders will come and check. That is your internal audit or information system audit. Your own staff does this, which are ICAs, and instead of concurrent or addition to concurrent, you literally ask these people to check so that there is no error before the actual auditor comes. Actual auditor is appointed under the statute. It is called statutory auditor. In this case, it is as per section 30 of the Banking Regulation Act 1949, everyone. To make sure that healthy, safe and sound banking system is having, that is through the independent financial statements. In this case, they are looking at regular study of the books and internal audit reports as well. They look at both the reports and they prepare their audit report under standards on auditing 700, that is 700, 705 and 706. These are the three audit standards which are used to show the to prepare their their audit report. And for the internal audit and the specific audit also has long form audit report which is to be submitted to RBI, and they also have to prepare tax audit report because of income tax department. So income tax department tells them to prepare a report, and even RBI asks them to prepare a specific report. है ना? And then comes who appoints the particular auditor, everyone? RBI, ICAI and CAG, Comptroller and Auditor General of India. These people prepare the panel who will be chosen for the audit. Private banks, normally their annual general, their AGM, then Assistant General Manager of the shareholders would be looking. There would be doing the AGM of shareholders. The shareholders would be called for a meeting, and in the meeting they will appoint their auditor. Then comes public banks. For public banks, the board of directors and RBI guidelines. This is from in this manner they will determine their specific auditor. Everyone, next part is your financial management. How do we define the financial management? How do we manage our finances is covered under the term financial management, everyone. So in this case, what happens is, chaliye, let's talk about this area further. Financial management means the study of the finances of the organization. So in this case, what do? We look at the strategic planning, organizing, directing and controlling specifically of money of the organization. These are the different forms of organization which exists. Sole proprietorship, one person. Partnership, two or more persons are included in this. Then comes limited liability partnership. In this case, one person will have unlimited liability, rest everybody has limited liability. That makes it LLP. When the organizations are basically having one head, it is called Karta. Acha, Karta is basically the person who is the head of a Hindu family. It can be Hindu, Jain or Sikh family, and the family has inherited property and they have their own family business. From their family business they earn money. That's a joint family which we are talking about. Okay, they run business and they earn money from their ancestral property. The head is called Karta and other people are called co-parsiners. Okay. Then we have association of persons and body of individuals. Association of persons means the persons, they form a club kind of thing. That is called AOP and BOI. BOI is having only individuals. In other case, we can have any other people. Partnership, company, all these people can be a part of it. Companies under Companies Act 2013 or any other act before that. And cooperative society is basically a mutual goal. Is there cooperative society for buildings or the people where we live in? है ना? Those are called cooperative societies, which can be for further many reasons. Under the financial management, what happens is you have to decide your capital structure. What is your capital structure? Whether you to survive, you have to merge or acquire another organization. Then we have dividend decisions. How do we take or pay dividends? And then the next part is Within the next part is regulatory compliance. How do you comply with your law? That is to be seen there. Acha, we have to look forward towards funding and working as well. From where we get the money and how do we pay the money. Next point is the area of fundamental principles of finance. Under the area of fundamental principle of finance, everyone, see, whenever we are talking about this, we always have to find the time value of money. Everyone, if I put money, if I get 10 lakh rupees in 2034, is it gonna be the same value as per today in 2024? The value of money has declined over the period of time, है ना? How has it declined? If I talk about the value of money in 2000s, 2000, 3000 rupees were a huge amount. Right now, it's not the same. Time value of money says the present value is greater than your future value. It will always be like this. Okay, there can be multiple reasons. Interest factor is interest is added over the period of time, and other things are also involved. For example, not only the interest, other things is basically your then interest is inflation and the economy. All those things are there. Then comes opportunity cost. Everyone, either I do a job right now and earn 20 lakh rupees, or I study further and make it 40. The particular job I will be foregoing to earn more rupees. This is where you have to lose some benefit to gain a benefit. That's called opportunity cost. Obviously, in businesses, risk and
Okay,
return is
everyone,
always there.
let's
High
continue with
return
the
means
next
you have
point.
to take
What
high
do you
risk.
mean by the agency theory? Agency theory matlab the managers are just the agents of the entire company. They are not the owners. So that's why sometimes what happens is managers are looking for their interest, shareholders wants their interest, and there's a conflict. Okay? Then the next part is stakeholders theory. Stakeholder is basically the one who's affected or who's interested in the organization, so they look forward towards these area. For example, employees, suppliers, community overall, these are interested in knowing what is happening in the organization, but they are not always a part of the interest area. Okay, so this is one particular area which is take theory. Then comes business ethics and social responsibility part. First part is your ethics. They talk about the business ethics, which is basically the the shareholders and stakeholders, the ethics should be there so that right practices are going on. Then comes CSR, corporate social responsibility. An organization has to keep 2% of their net profits separately for corporate social responsibility. That means for the societal welfare, you have to keep around 2% of your income, so that this is gonna help the entire society for the benefit. Matlab, it can be for environmental, philanthropic, ethical, or economic, any of these reasons. Then comes the various types of ratios, everyone. The ratios is one of the most important topics. In this area, I have covered the entire types of ratios which are given in our book. Number one, when we talk about ratios, ratios is division of one particular element of financial area with another topic of financial area. The first one is the solvency ratio. Solvency matlab, if you ask me that Niharika ma'am, give me 10,000 rupees right away, can I give you that money or not? That will be called liquidity or short-term solvency. The formula for this is current ratio is the first one, CA divided by CL. Current assets are those assets which are used in the business and they materialize within a period of 1 year, everyone. That is current assets divided by current liabilities. That is your current ratio. Second part is quick ratio. Quick ratio is basically all the current assets, but again, some assets are not very quick in sale. For example, stock takes a sometimes the stock takes a lot of time to sell. है ना? And at the same time, prepaid expenses. If I paid for the prepaid expense, na, then till the time is not over for which it is paid, it remains prepaid. For example, if I buy a specific prepaid SIM, it is for 3 months I've taken the particular SIM card. So for those 3 months, the plan is going on. I cannot convert it into cash in those 3 months. So it's a prepaid expense. It's not a quick asset. Rest everything is a quick asset. So this is your short-term solvency ratio or the liquidity ratio. CA upon CL and QA upon CL. Solvency ratios, how to learn? Remember, CL is on the lower side. Long-term solvency ratios are very easy. Just remember it on the basis of their names. Fixed asset ratio is fixed assets divided by long term funds. Long term funds matlab debts. How much of your fixed assets are built on your loans is your fixed asset ratio. Second is debt equity ratio. Debt equity ratio matlab the ratio which talks about debt upon equity. Either this can be internal funds divided by external, matlab this is external funds divided by internal funds, or in this case there's debt to total ratio, total liability side as well. That means you take the debt above and the total liabilities below. That means equity plus debt both. So this ratio talks about what portion of your business belongs to the loan area and rest belongs to the other. Then we have dividend yield ratio. How much income are we making, everyone? Matlab, what is the ratio what is the amount of uh, income an equity shareholder is getting? Right? Equity shareholder will make dividend divided by market price per share. For example, the share price is say 100 rupees and you get 20 rupees as dividend out of the total profits. That means 20% is your return. Then comes the turnover ratios. turnover ratios. Turnover means sales. The first ratio is stock turnover ratio. Everyone, in these ratios, turnover is basically on the numerator side, and this ratio is calculated in times. Stock turnover ratio means take your COGS and divide it by average stock. Average stock matlab opening stock plus closing stock divided by 2. And what is COGS, everyone? Do you remember? COGS is basically your opening stock plus purchase plus direct expenses minus closing stock. This particular ratio talks about how many times in a year your raw material to finished good thing cycle happens. The more it happens, that means your organization is more active. Second is your debtor turnover ratio. Debtor turnover ratio means in a year how many times your debtor is converted into cash. Since it's talking about debtors, you do not consider the total sales here. You consider the credit sales and divided by average trade receivable. Trade receivable includes both your opening and closing bill receivable and opening and closing debtor. If this particular ratio is to be converted in how many after how many days these people pay, then what you do is 12 divided by DTR, the debtor turnover ratio. This will give you in months the number of times your debtors pay, and then 365 divided by DTR, which talks about in how many days the debtor turnover ratio. This recovers the money from the people. That's turnover ratio. There are certain ratios called coverage ratios. But the coverage ratios talks about whether you are able to pay off your loans or not. Fixed charges cover matlab जैसे देखिए earning before interest and tax. You earn this much amount of money. Are you earning enough that you can cover your interest, everyone? ठीक है, earning before interest and tax divided by interest charges. That is to be added there. When we talk about debt service coverage ratio, you're not only going to cover your interest but also your principal. So you write down your total profit that you have divided by the interest and principal. These two ratios talks about your affordability to take loans or not. ठीक है ना? This means your amount that you have earned divided by the amount you have to pay. This determines whether you're able to pay the amounts or not. Then comes the profitability ratio, everyone. Profitability ratio matlab the ratio which talks about the profits of the organization, which defines operating profit divided by capital employed. Operating profit matlab exclusively the profit of the business, which is based upon the total earnings, which is exclusively from the business. No interest, commission, and everything else which is not from your business. Pure operating profit and divided by capital employed. Capital employed means the long term funds involved. Share capital plus the long term debts in this case has to be taken. This ratio is calculated in percentage, everyone. ठीक है? Then comes earning per share. What is your earning based upon your area of earning per share is based upon what? Earning per share is based upon the earnings which is made by equity shares. मतलब whatever they profit they get minus the preference dividend. मतलब preference gets money before them na. So whatever is left for them divided by the number of people it would be shared among. ठीक है? That is total profit divided by the number of equity shares. Then PE ratio. P matlab price, E matlab earnings. So this is price, market price, E EPS, earning per share. So MPS upon EPS is your PE ratio. GP and NP ratio is the ratio. Take your GP divided by sales, take your NP divide by sales. How is GP calculated? From your sales, remove your COGS, everyone. From the sales value, remove your cost of goods sold. That will give you GP, and then when you remove all the indirect expenses, add back all the indirect incomes, this will give you NP. This is how we define the profitability ratios. Next part is your bonds, everyone. How do we define the bonds? Bonds are basically the loans which are taken by the organization for what reason? matlab for the growth of the business. Under this they have fixed rate bonds, matlab when the interest is fixed, is called fixed rate bonds. When it changes with the economy, it's called floating rate bonds. Normally, long term bonds are basically floating rate is more beneficial. Zero coupon bonds means no interest involved. What you do is you issue at a discount and redeem at par. Issue at discount matlab if it is of 100 rupees, you issue at 90 and pay 100. So this 10 rupees is actually the hidden interest. So we call it zero coupon, zero interest bonds. High yield bonds, also called junk bonds. These have a lot of risk and but they also give huge rewards as well if they materialize. They are called high yield bonds. Convertible bonds matlab which the bonds which can be converted into equity. Ultimately, the aim of preference share, the debtor, the debentures and all is always about the growth of the organization and getting into the organization as an equity shareholder. So convertible bonds are basically the bonds which talks about converting into the owner of your organization. Then comes inflation index bonds, the bonds which are basically worried about the inflation point. That basically gives your interest and all on the basis of inflation. Asset backed securities matlab you say that if I am not able to pay you, here is the asset, you sell this asset and give me the funds there. ठीक है ना? Done everyone? Next part is your subordinated bonds. These people are fine if they are not the priority bonds. They wanted to be the priority bonds, but in this case, they will not be the one. Okay? So in this case, they call it asset subordinated bonds. They are like, okay, if I'll be the second priority bonds, that is what we look forward to. Done. Then comes the area of perpetual bonds. The bonds which we talk about, they are going to exist for a very long period. Perpetual bonds matlab the bonds which are existing for till the end of the life of the business are called perpetual. You don't really pay back. Bearer bonds, the one who holds the bond will get the interest, is bearer bonds. There is no person specific to whom the payment would be made. Then comes the specific area of treasury bonds. These are the bonds which are issued by the government to raise the money for themselves. Bonds with call or put option. Call option matlab the company has the option whenever they get funds, they will pay they will pay the investor back their money. Put bonds is basically put options is where the investor can come and say, give me my money as early as possible. That is put options. Okay? Then comes under this area, you have to find the present value, everyone. Why present value? Because the bond valuation is for future. If you lend the money to the company today, they will pay you interest for 2-3 years, and after 2-3 years they will also give you your principal back as well. That means the amounts are futuristic, then the futuristic amount has to be converted into present. If you, the rule says if you are starting from present and looking forward towards future, what do we do, everyone? If you start from present and going into the future, in this case you multiply p1 plus r raised to power n. This was your interest and annuities. Compound interest is going further and multiplying the interest, and when you want to come back, you will divide. That means p your the future value divided by 1 plus r raised to power n. So when you go into the future, you multiply. When you try to come back into the present, you divide. In this case, you are dividing it by 1 plus r raised to power n. So this part is your interest, and the remaining part is your future value of the particular bond as well. Face value. For example, the current value is the interest is say 10 rupees, and by the end you will receive your 100 rupees of that bond as well. So both of these has to be converted into present value to see whether the bond valuation is good enough or not. Acha everyone, there are two particular methods called coupon yield or current yield. Coupon yield matlab interest. That is your interest payment divided by face value. Interest is always paid on face value, everyone. Always remember. But when we talk about current yield, matlab the current money that you are getting. Your current interest divided by your current market price of the bond. Okay, this is pure current based. Then comes the area of valuation of the bond. How do you value the bond? The point is there's a bond price volatility. The price of the bond is sensitive to changes in the interest rate. If interest rate goes up, your bond price will also go up, because people will be running towards the benefit that they are reaping now, so they want more benefits. Vice versa will happen in terms of the bond. So that means the price is definitely an affecting part for the organization. Then comes calculation of YTM. That is yield to maturity. What's the method? The method says you pick up your interest part plus F is your future face value minus your price, matlab your current price at whatever is going on, divided by N. This is for the number of years you have taken the loan. Everyone learn this by heart, because if you remember this formula, this will also be used in other chapters. Okay, so that is F minus P, your face value minus your price, divided by N, that is the number of years it is existing, and take the average below. So that means interest plus face value minus the present value divided by number of years, and then you take face value plus present value divided by 2. That means you're taking the average of it. Always solve these brackets first. F minus P raised to power N has to be solved first, and divide by the F plus P, divide by 2, and then add it up with the interest. Then you will get the correct calculation, everyone. Acha. Then comes interest wala part. Interest is interest and annuities actually. So when we talk about this area, we just talked about it. There is something called simple interest. There is something called compound interest. Simple interest is P into R into T upon 100, principal plus principal into rate into time, that will determine. But always remember, simple interest is always the same amount. Compound interest is basically you get interest on interest. Your whatever money you put into the business is again reinvested in the business, so your money multiplies at way faster rate. But under this area there is something called rule 72. If I say in how much time I can double my money, so what will you do? You will do 72 divided by the rate that you are offering at that point of time, that by this amount, that by this age, this particular amount can be raised. That's an example there, everyone. In terms of interest, we have fixed, matlab you will pay this much amount of money every single month, or floating, every time it changes. That's called floating rate. Done, everyone. When we talk about this specific area, that is rule 72. That means 72 is defined as, if you talk about in how much time, in how many years your amount becomes double of its value. Okay, for example, the current rate is 8%. So in how many years it will become double? 8 nines are. In 9 years, your amount will become double of itself. Then comes annuity. Ordinary annuity and annuity due. Every year you save a specific amount of money, and with this specific amount of money that you save, your money grows further. For example, in Provident Fund, the people put their money by the end of the year. When they put their money by the end of the year, what do they get? Your principal, the amount that you are putting into that area, into 1 plus interest rate raised to power n minus 1 divided by I. Remember this formula very carefully, because this is the same formula that you use in multiple areas. Okay? Under ordinary annuity, matlab you are putting the money by the end of the year. So that means in this case you are keeping your money on a uniform basis for the upcoming years. Everyone, what if I put the money in the beginning of each year? That means you will be rewarded an extra interest rate. Now that is your the same formula, C into 1 plus I raised to power n minus 1 upon I multiplied by 1 plus I. This is the extra 1 year interest that you are getting, just because you start with the particular year with the payment itself. So you get for one particular year interest extra. Then everyone, if someone has to calculate what is the formula for EMI, P into R into this 1 plus R raised to power n divided by 1 plus R raised to power n minus 1. And always remember here the R is per month, everyone, and this n is the time. The time is also for 12 months. So whatever this is, whatever year is given, multiplied by 12, and then you will be able to find the number of installments the organization has to go through. ठीक है ना? Done, everyone? This is interest and annuities. Everyone, the next part is called forex arithmetic. Forex arithmetic talks about your foreign currency. So foreign currency that we possess and we transfer, or we basically try to convert it into Indian rupee, because in India only the Indian rupee works. So that means even if I have anything else, I should be converting it into Indian rupee. But in other countries, I really need that part. For example, I'm involved in import export. All this money is required. So what do? There are certain organizations which are authorized by RBI for this particular work. I can go to those organizations and get the money there accordingly. There is something called direct quote. Direct quote means the specific foreign currency is written on the left hand side, and right hand side is our currency. So always follow, when left hand side is your foreign currency, then it is called direct quote. Or in the second case, if this on the left hand side the quote is not this, then this is an indirect quote. ठीक है ना? And if you have direct quote, from direct quote, if you want to convert into indirect or vice versa, do nothing but just divide the particular rate by 1 and you will get the answer. If you are sitting at direct, you will get the indirect. If you have indirect, you will get the direct. ठीक है? This is your direct and indirect quote. Everyone, there is something called cross rate. If I want to convert my rupee into Swiss franc, I can do that. If I have Swiss franc, I can convert it into rupees if the particular role is established. What if the role is not established? In terms of, if we talk about India, everyone, India is trying to convert euro into, then further chain rule. Matlab, one particular, I have Indian rupee, I want to convert it into Chinese yuan, and then that would be converted into the Swiss franc, because direct quotes are not available. So what will I do? First of all, I'll sell the assets there and buy the new one. ठीक है ना? And अच्छा everyone, then the next part is your chain rule. Done, everyone? So in this case, there is something called chain rule, which we talk about. Once you sell one particular asset, that will lead to another asset. Then comes a value date. The date on which you are looking forward to this entire scenario is called the value date. Everyone, in the forex arithmetic, we have got different types of transactions as well. If anything is ending between t plus 2, transaction date plus 2 days, and a maximum it can be adjusted in this area. That is something we call, see, if I have a transaction and it is adjusted within that particular day, this is called today, t plus 1, maximum within that activity day is done. Tomorrow matlab is basically not at ending today. The transaction will be done in maximum t plus 1 day. When it is maximum converted, or maximum it is done by transaction day plus 2 days, it's spot. Beyond the spot, if it grows for more than 2 days and the amounts are specified, it is futuristic and everything else is happening, then it is called swap and forwards and options as well. It can be either of these. Swap is basically you have one kind of shares and you convert it into different other kind, provided ultimately you are working hard for it, is the point. And then is forward. Forward matlab, everybody done? When we talk about the spot is basically the particular transaction of the particular currency which can be done within maximum 2 days. And when we talk about swap, I have currently cash, and that cash is converted into that cash is converted into um, when we talk about the area of swap, I have dollars. The dollars are converted into Indian rupee in terms of cash. After a little while, it is again invested in the particular organizations in the same manner. That is covered under the area of swap. Matlab, you exchange, you have one thing and you convert it into another. Okay. Then comes cost of capital and capital structure. What should I have in terms of the cost of capital and capital structure, everyone? Matlab, what part should be your cost and what part shouldn't be the what part should be the debt and what part should be equity? Basically, debt and equity can be defined under what, everyone? Debt and equity. Debt part is basically the portion which is the money that I've taken from others. Equity is what? The portion that we have in terms of the business, which is owners funds. So I have to decide what part would be the owners and what part would be the one that we are taking from someone else as a loan. In this case, cost of capital and capital structure, we have three different approaches. The first approach by David Durand is net income approach. Under this approach, he assumes that the cost of debt and cost of equity remains same irrespective of the portion. You get more debt or you get more equity, it doesn't matter. The particular effect of it remains the same. Reason that the weightage is definitely balanced by each other. In this case, what do you have? Whatever your cost of debt is, okay, whatever your interest rate of debt is, multiplied by the weightage. Matlab, it is 50% is debt, 50% is equity, then multiply with the proportion. Then whatever your cost of equity is, then multiplied with the proportion of equity. Then we have a net operating income approach. One is net income. Net operating income approach says the benefit of the firm derives by the debt is negated by the simultaneous increase in the area of equity. If you have taken a lot of loans and at the way you are also taking, see, in this case, it's more or less like a situation where they say ki uh, there are so many negatives already, and those negatives get cancelled because of the other point. Okay, so that means if I try to take a loan, it is going to affect the overall working, and basically what will happen is if there's a lot of things that these things can go waste even. The point says that the benefit that a firm derives by the debit is negated by the simultaneous increase in the rate of return by equity shareholders. So these people have definitely shown a backlash there. Done, everyone? The last part is traditional income approach. Under this method, what do we do? Done, everyone? That is how we define this second area. Then comes the traditional approach. Traditional approach says when the proportion of debt increases, obviously the capital will also increase. Overall, the debt otherwise will have more stronger point. We don't want that the debtors should be way too much. Everyone, traditional approach says that according to this approach, when the portion of debt capital increases in capital structure of a firm, the cost of debt will start increasing beyond a special product. Done. The last method is net income approach, which is basically your traditional method approach. Under traditional method approach, what do you have? You define the method completion beta. Okay, that is something to be seen. Done, everyone? When we define the specific area of When we define the specific area of Companies Act defines everything under Companies Act 2013, and these are basically the bonds which are customized as per the requirement of the organization. Done, everyone? When we talk about the traditional position, it says the proportion of the debt increases the portion of the burden on the organization, thus, it is going to affect your overall money. When we define these different approaches, these are based upon what? The capital structure is the portion that is given by the owner himself, or the money that he's taking from others. That is the debt. So debt and equity is defined under these approaches. The next part is your everyone concept of debt and equity. In this area, the same formula that we took in YTM is used, but there's one difference. Instead of having interest plus F minus P, ठीक है, divided by n, here more weightage is given to the present value, that is 0.6 into the present value plus 0.4 into the market maturity value. That is what we take, and somehow the area of cost of debt capital is also the same, and both of them gets more priority over equity when the company is dying. These three have a specific setting in terms of which particular topic has been done in a detailed manner or not. ठीक है ना? Then comes cost of equity capital. Everyone, when we talk about equity capital, the earnings of the equity can be defined here. How is it defined? Everyone, the total return that you make on equity as per CAPM, capital asset pricing model. First is your risk-free rate of return without any risk. Even if you take a risk or anything happens, this is a minimum return you will get. This is affected by sensitivity factor. Sensitivity factor is the factor which changes if the market changes. If it changes more, then it is beta, which is high. If changes less, it is beta, which is less than 1. Then your your particular sensitivity is affected by risk premium. Risk premium is the money that you receive just because you are ready to take little more risk. Market amount will always have the risk, na? So from the market part, remove your pure risk वाला area, ठीक है, और प्योर रिस्क फ्री वाला एरिया. मार्केट, from the total market, if you remove the pure risk wala area, what are you left with? Then you're left with the left side. That means the area where we didn't take take that particular topic. That is how we define the topic of CAPM model. Everybody, when we define the specific area of the CAPM model, this is based upon your market rate. From this, you remove only the risk-free part. Risk-free part is what? Risk-free matlab when there is no risk involved. So this part is called your risk premium. And everyone, the next part is bond yield with the risk premium. This is one part that you will receive because interest is your right, so you will receive the interest, but plus the more risk you take, the more risk premium you will receive. Then is dividend growth model. Dividend growth model clearly says that what is your market price, matlab what is the market price of your share, that is your dividend of the future year divided by cost of equity minus the growth. This is the formula for finding out the price of these things today. Then there's earning price ratio, just follow the name. Earnings are written above and price is written below, and we try to find out the specific communication in terms of the EP ratio towards the shareholders, that what is the earnings that you are making out of your total price for the particular organization people. Then we have flotation cost, the cost which is unevitable, which is required if you want to go to the banks and all, shares and all. We're trying to float your money into the business, huh? So how do you do that? By having that one minus the specific amount. Done, everyone? In this area, that is how we define flotation cost. Flotation cost matlab the cost which is incurred when you are trying to float or you are trying to issue your shares in the market. So you have WACC, whatever your weighted average cost of capital, and you divide it by 1 minus your flotation cost. Cost to issue the shares in the market is considered here. Next part is called your derivatives. How do we define the derivatives, everyone? Derivatives matlab you find the cost of your financial instrument based upon an underlying asset. For example, you and I are talking that pata hai, I believe the price of this commodity will go up. You said nahi nahi, the price of this commodity will go down, but none of us is actually having the commodity. But this commodity is determining what will happen to our fate. So in this case, this is called derivative. Financial instruments settled in a future with the desired value of underlying asset, everyone. That is how we define this area. Okay, the key assets are basically the interest rate, foreign exchange, credit ratings. All these things are required when we talk about the derivatives altogether. Derivatives have independent value but based upon independent value which is based upon the underlying asset prices. Low initial investment. Initially you have almost no investment involved. Basically you're just playing with the particular anticipation that you make and I make, and these are not settled on the very day that they are talking about. It is normally adjusted on a future date. Functions of derivatives. What are the various functions of derivatives? First is this helps in managing the risk. When you anticipate the prices and when you anticipate the losses and profits, and you are looking forward towards what is going to happen, the price is going to increase or decrease, you try to mitigate your loss. You cannot eliminate, but you try to mitigate, at least reduce. And on this basis you are also trying to look forward towards price discovery. Once one you're talking about demand, the other part is talking about supply, so there's a liquidity involved in it. Capital access, everyone. Alternate funding avenues are there. Okay, how do you arrange your funds based upon your derivative? Market depth. When you play with this liquidity and area na, you come to know how to at least price your product in the market. That's gonna be the area here. And who are the users of derivatives? Hedgers, the people who are not interested in taking risk, they are hedgers. Speculators, you play with the money. If it goes low, you buy. If it goes high, you sell and you make profit out of it. Arbitrageurs are basically those people who found कि देखिए the particular centralized area is, there is no centralized market, so you buy from one market at lower price and sell it to the other market at a higher price. And there is margin traders, everyone. These people, what do they do when they need money? They take loans in order to buy and sell securities. They are working in this field like that only. Okay, under derivatives, derivatives can be over the counter. When you and I sit down and decide the price and the commodity interest rate, how do I pay that? Under exchange traded, you do not have it. It's just like SEBI there. So you can look forward towards purchase and sale of any derivative in terms of the exchange there. Who regulates this market? Either SEBI and RBI. Both these parties are doing that. Even the FIMDA is also regulating, but it is also covered under SBI, under SEBI. So in this we got about Indian market derivative products are basically forward rate products. Matlab you sit down today and say that after 10 years I will pay you money. So then the particular person will wait for that time. That is forward rate agreement. ठीक है, agreement can be both fixed and floating. Fixed rate of interest is this amount will go, And floating means it changes with the economy. Next part is plain vanilla interest rate swaps. Plain vanilla interest rate swaps is what? That means you have taken a loan and you're gonna pay the interest back. Okay, so that is your principal, it would be paid later, but your interest would be paid, and later on the other amount will also be paid. है ना? Then comes interest rate options. You managing the risk by owning the without no owning the asset. So you're basically going to change the particular interest. I have floating rate and you have fixed. So we can swap the interest. That can be done. That is called swaps. Basically, you can exchange anything that you don't want. Okay, you can swap your interest in this case. Options is basically when you can, with the price rise or price fall, you choose whether you want to buy or sell. It is not your obligation ki you have to do it. It is your right. You want to do it, do. If you don't want to, then you don't. Futures and forwards are basically futuristic derivatives. When we talk about the derivatives which would be settled in the upcoming future, but if they are through the exchange, it is future. If they are customized and I decide, you decide, over the counter, sit down and talk about it, that is forwards. Acha, then if I have money, it's good, but if I do not have money, then what can I do is I can take a particular asset on rent, which is called leasing, everyone. Leasing is basically an agreement between the lessor and the lessee. Lessor agrees to pay the rent to the lessee, agrees to pay the amount to the lessor, and he uses that asset. There are different types of leases. First is long term and short term. ठीक है ना? Under the long term, this is when the particular person uses it for a long period of time and buys that asset even from the person. Operating lease is for short term lease. Financial lease is long term. Operating is short term in nature and can be cancelled after that particular time period. ठीक है? Leverage lease, I do not have money enough, so what I do is I borrow money, buy an asset and provide you on lease. Then is domestic versus international. If it is Indian, it's a domestic lease. If it's an international level, it's an international lease. Then wet lease is where owner is having all the responsibilities. Cleanliness, maintenance and electricity and everything, it is their responsibility. That is called wet lease. And when the company keeps in their hands, this is called dry lease. Okay, then comes sale and lease back. You want funds but you do not have, so what do? You sell your asset and then you say this asset is sold, while you haven't sold that asset, but what you do is you give that particular asset to the party to use, and you get money, you know, for that particular thing. So you get money and you lose a particular article. That is how we define the specific area of life. Done, everyone? This is how we define the area of dry and wet lease. Sales and lease back is basically what you do is you take care of your business, and then what you do is you give that particular asset back to the organization there. Done. This is how we define the specific area of leasing, covered under AS 19 as well. When we talk about the taxation, at least when we pay, you can cry in front of income tax department that pata hai, I've been sitting in front of EPC for so long and all that. They will not listen to this part. That is how we define the specific area of leasing. Then leasing can be done by using two methods, NPV and IRR, net present value or internal rate of return, right? In this case, you will determine at what whether the particular working with the particular organization is it at least helping you or not. Then that is based upon the area itself. Then comes evaluation methods. Find the evaluation method. Done, everyone? That is how we define the area of leasing. Everyone, next part is working capital management. Working capital matlab the capital that you need on a daily basis to run your business is your working capital. So working capital is the money that you need on your business for running your business. So it can be your own money or the money that you will receive in future or trade credit. You take it from the suppliers that you will pay them later on. Bank advances, you take bank loans, CC, OD are a part of it. Public deposits, the money that you take from general public. Intercorporate matlab the money that you would take from your other organizations which are also in the same field. Commercial paper is you raise funds from the general public, but you have to be very much into this business and you have to be very much stable to do this. Then is factoring and forfeiting. You cannot take the money from that particular debtor. You make sure that you get that money arranged from either the factor or the forfeiter. So these people arrange the funds for us. ठीक है. Then under the working capital we have two different areas. Tandon committee is super important, everyone. Under Tandon committee, the first method is whenever you have to find what is the maximum permissible bank finance, मतलब what part that bank will give and the remaining you have to give. So in the first case they say CA minus CL, find your current assets minus the current liabilities, and then 25% of it is something the particular person has to save. ठीक है. That is method 1. Under method 2 you find the total current assets as net working. In this case you take 25% of total current assets. Then under method 3 you take the 100% of your core assets. In the first case you find it of current working capital gap, CA minus CL. In second case 25% of current assets. In the third case 25%, 25% of other current assets, and 100% of the most important assets are taken. Along with this they also create the cash budget, everyone. Cash budget is done to maintain your business. So this is to find out the suitable for seasonable or order business. You have to anticipate whenever good amount of money would be spent and you need funds as well, you want to grow further. All these are covered under cash budget method that you look forward towards different seasons. And 25% of the peak cash deficit is financed by networking capital. You arrange the funds from there, right? And this is ideal for high limit. These people can sell their particular transactions for the amount there. This in this way they can raise funds, everyone. Acha, next part is your bank audit. What do you mean by bank audit? Bank audit means the audit that you do in order to find out whether your books of accounts are going. Acha, we are done with this part. Huh? We're done with bank audit and inspection already, everyone. So skipping this part and moving to the next part. Revenue audit was the audit for income. Okay, stock audit is basically to check the stock of the organization and their debtors, whether they are true or not. Forensic audit is when you know that there is some error or fraud going on, then you look forward towards that fraud. Then you have management audit when you look forward towards studying exclusively the management to how and their decisions. And then tax audit can be done to check the organizations in terms of DT and IDT regulations. Then what are the banking companies in terms of audit? You can check their financial statements and banking company as per Financial Banking Act and RBI. Then you conduct an audit and 3 copies has to be kept. After 3 months and maximum you can get 3 more months. That's the maximum period an organization can get. Okay? Within 6 months these particular organizations have to put their balance sheet into the bank. Okay, so that means if you're talking about your books of accounts, you have to make sure that you're preparing everything in a proper manner, right? That's your audit. Then comes IT in the banks. Matlab basically the banks are dependent upon the computerized area, na? So they were earlier dependent upon the filing. Now they are dependent upon computers. So analog computers came, then digital computers, and now hybrid computers are being used. How do we protect ourselves? By using password. By what are the passwords? The passwords should be based upon numerals, special characters, and capital, and they should be strong. At least 8 characters should be there. But do not use your name, do not use your family name or personal information, and common words, something which can be easily guessed, should not be there. That is what they say. And you should change your password every 30 days Then look forward towards channel banking, omni, or now to even neo banking is also in the trend. Just make sure whatever banking system you use, you are protecting your funds for future. Okay, let's move on to the next area, everyone. This is the area of income tax. Okay, let's talk about income tax now, everyone. Income tax is a compulsory payment of tax that one particular person has to make. Why? Compulsory payment of tax because the government says that you are supposed to pay me this much amount of money. So this is covered under 1961 Act. Number one, who are the people who are involved in it? Individual, HUF, we have talked about Karta there recently, na? When we talked about FM. Company, firms, LLP, AOP, BOI, they are all a part of it. Local authority, matlab municipal corporation, municipal committee, panchayat, they are all under. And artificial juridical person, like universities are a part of it. Then the different heads are salary. You do a job, you earn salary. Then what you have, you make your own house, then you have house property. Then you have a house property, then you start your business, that is called profits and gains from business and profession. And then what you do is you sell those assets, you earn capital gains. And last is should put money that you earn from the bank or commissions or renting out those basic machineries and all, it is covered under other sources. This also includes your dividend, everyone. Under salary head, 50,000 is allowed as a reduction on your salary there. Acha, how do we find out whether the particular person has invested funds or something? You find out the individual person on the basis of their PAN card, where it is alphanumeric in nature. Six alphabets and four digits are there, and you should link your Aadhaar with PAN. If you haven't done it yet, there would be a penalty on the same right now. Then we have deductions under 80C to 80U. ATC says that maximum 1,50,000 should be invested in the saving area, where, for example, Provident Fund, in your children's education, or when we talk about Sukanya Samriddhi account, 5 year, the tax savings securities, whatever you put there is covered under this. 80D is exclusively for your medical insurance. For us, it is 25,000. For our parents, where they are above the age of 60, then 50,000 rupees as a reduction is available. If you take a loan for education, E for 80E, E for education. If you take a loan for your education, it is covered under this in terms of interest. Interest is allowed as a reduction under 80E. 80G is for donations, everyone. That means acha, you shouldn't be going for donations above 2,000 in cash. Beyond that is not allowed. And 80G is available for all the donations we make. Then we have 80 QQB and RRB. QQB and RRB both are maximum the amount, or 3 lakh, whichever is lower, is allowed. QQB is for royalty on your books, and RRB is your royalty that you receive on the assets there. Okay, patents, trademarks, copyrights, whatever you get on these bases. 80 TTA is something you and I get, that is we are below the age of 60 and we get less than 10,000 rupees of our saving interest. If we get, if I talk about the senior citizens, for them they earn a lot from their savings account, so their savings account up to 50,000 is exempt. And 80U is for the people who are facing any kind of disability. Okay, they are covered under 80U. This is up to based upon their severity. 75,000 to 1,25,000 is allowed as a reduction based upon their severity. Then comes income which is not included, which is not taxable. Agriculture income is exempt. The company is paying, or the partnership is paying tax on it, then the people who receive the remaining amount shall not pay tax on it. So share of partner is not taxable. Gratuity which they receive, or voluntary retirement, people work for all these years, why to put taxation by the end of the day when they're leaving the organization, right? Then we have superannuation fund. That means a specific fund is definitely there, which basically is related to the time when the time comes, the particular amount becomes mature and you receive it. Then filing mandatory. Every organization, whenever you are above the threshold limit, you are supposed to file your return, and you can get income tax in refund as well. Current year losses are adjusted later on. First is your unabsorbed depreciation as well as the current loss of the previous year. Okay, then income from outside India is definitely the money that we receive in the business, and this money is that you get from specifically outside India. And the in this case there would be taxation in terms of income tax as well as in terms of GST, everyone. Then comes deferred tax. Deferred matlab postponement of tax is there. Based upon what? If income tax department say whatever you do I disagree with it and I will not do it, this is permanent difference. And when we talk about the difference which occurs during this particular working days, where when we are talking about deferred tax and pay, this is permanent in timing, then these are the two base benefits that the organization makes by paying the tax. One is the deferred tax is something which is more than beneficial to look forward to. Why? Because deferred tax is basically the organization which is when we talk about the debtors and all na, so filing of return is compulsory. Whatever happens to your business, it is to be filed with the income tax department under the Income Tax Act 1961, everyone. Then the next part is tax deducted at source. Sometimes they do not believe in the fact that you are supposed to pay the loan na, matlab you are supposed to receive the income. They A part of your income is deducted and given to the income tax department right away. That is to be covered in the area of TDS. Okay? It is, you have, the people should have TAN. There, for example, I should have PAN for income tax, and to deduct TDS, I need to have TAN. And the person who deducts is called deductor, and the person whose account is basically reduced is deductee. And yes, one can pay advance tax as well. Tax collected at source is basically when the seller is making sale. For example, liquor is there. If I sell liquor, then yes, I would have to pay tax on it in the form of tax collected at source. Who are exempted from this area? Public sector undertakings, central or state embassies, they are covered into this. And whenever we talk about the certification of the particular GST from income tax, which is basically deposited, that is 27 EQ and 27D. These are certifications. So interest of 1% per month, higher rate of TCS, tax collected at source, 2 years non-filing. If this thing happens, first of all, I think I would say you should always wait if such a situation occurs, and wait for the time being and keep on looking into the book, because sometimes your book is so good that think they give a lot of information to one. Done. This is how we define the specific area. Acha. Then we have goods and service tax, another indirect tax, everyone. This is not direct in nature, this is indirect in nature. Under goods and service tax, the different types of, this is a dual model. It started on it was introduced in our country on 1st of July, which is on sale, transfer, purchase, barter, lease, and import. This is available on import as well, huh? Applicable on import, on which this is not applicable on crude oil, petroleum products, alcoholic liquor. They are not applicable on these. GST limit up to 5 up to 10 lakh. This is not in up to, this is in terms of Meghalaya and Manipur, all Nagaland and Tripura. If it crosses 10 lakh, then it is basically something which would not be taxable up to 10 lakh. Up to 20 lakh in the organizations, which is normally put some. And then for any Vesana, if I talk about GST limit, if you cross the limit of 40 lakhs or 20 lakhs in certain states, then you are supposed to get the registration done within 30 days. If you cross 30 days mark, then you are supposed to face penalties under GST Act. GST Act has also got some decision making is done by the council, and yes, they make recommendations as well. Types of GST is basically dual model, so that means one part is your center, one part is your state. So you have CGST and SGST, or if your state is basically a UT, you have UGST. And everyone, if we have interstate sales, matlab from Chennai to Chandigarh, or from Punjab to Haryana, these are basically based upon IGST, integrated goods and service tax. And in this case, what are the various UGs, everyone? UTs. First is Andaman and Nicobar, Lakshadweep, Dadra and Nagar Haveli, Daman and Diu, Ladakh and Chandigarh. These are the states which are basically UTGSTs. UTGST is UGST, which is levied on these organizations, right? Then GST return. What is the GST return? It has to be filed monthly or quarterly. It is there are two areas: IST, which is given monthly; TDS, TCS is deposited monthly. Non-resident period of activity is there. They are active for a specific period. They should take permissions for opening their books of accounts in terms of that particular area. Then if your organization is earning more than 1.50 CR, then you have to file GSTR 1 and GSTR 3. Done. Then we have if it is less than 1.50, then what will you do? You will have to issue GSTR1 on the quarterly basis, and GSTR1, that is what we have in terms of your return filing. When you are crossing the mark of 1.50 crores, it would be covered here. Okay. Next part is your costing, everyone. Next part is your costing, everyone. Costing is defined as the amount of production expense there that is being incurred. Okay, this particular amount will determine what? This particular amount will determine your selling price, right? Material cost, labor, and expenses. If this is exclusively linked with your production, that's called direct. If it is not linked with it, it is called indirect. Then there is volume of production. Fixed cost remains fixed. For example, the rent that you are paying will not change if you produce more or less. Variable costs are the costs which vary with production. For example, if I produce more goods, variable cost will increase. If I produce less goods, then the cost will be less. For example, raw material cost will be less when I'm producing less. Semi-variable means the ones which are having both. The one which is basically semi-variable can be defined, which is both variable and fixed. For example, phone cost. One part is the rent that you will have to pay for the particular phone, and plus the remaining part is for your consumption, which varies. Then we have cost centers, which is responsibility center assigning. That means their responsibilities to reduce their costing. There are the separate cost allocation is made for different areas. For example, activity based costing. You do more activity, more cost assigned to you. You do less activity, less amount is assigned to you. This is as per SEMA. Okay. Then comes the classification. Productive matlab, which is exclusively linked with your business. When it is not exclusively linked with your production, is unproductive. Mixed is basically looked forward to, where both of these things are there. Cost unit can be kilogram, liter, number of units there. That can be cost unit defined. Management accounting is basically an accounting which talks about management, is basically funding as well as raw material, and the entire working is taken care by. Then tools and techniques which they use is they manage their funds, they manage their appropriate tools which helps them in working. Financial statement analysis matlab last year, this year, upcoming years are studied, trends are made, and analysis is created that what is happening with our company. Statistical and graphical both tools are used. Histogram, bar graph, they are created. And yes, we also look into the method of accounting of the organization. This is the point there. Okay. Then comes the next part. What are the various costing techniques or methods? First of all, unit or single output. Matlab, everyone, you start making brick and you make bricks only. Mining, sugar, one particular thing goes on, so that goes on forever. So you what do you find? total cost divided by number of units that you have produced. This is simple. Then exclusive customization work is done in terms of job costing. For example, you asked me to prepare sofas for your organization. That means I'm preparing sofas exclusively for a specific area. So costing is different from each and every customer, and I have to find out the cost that would be incurred overall, and how much profit I'm going to charge will be based upon this particular cost that I'm going to incur. Direct material, labor, overhead, and the fixed one. Contract costing is what? Contract costing is the costing where you have a contract for production of maybe a house or maybe a bridge, maybe a specific infrastructure, highway and all that. है ना? If it is normally for more than one. That includes your shipbuilding, construction, contract, infrastructure projects, all these are covered there. There are three methods. First is you decide the price that, sir, I will charge 10 lakh rupees flat. Or you can say, no, no, whatever my cost will come, I will charge 10% extra as my profit. And we will also charge for your time and material. Okay, there is something called escalation clause as well. If the change in price occurs, this will also change. Then we have progress payment. We will not make the payment altogether. Once the part which is done, we will pay for that part. Retention money, matlab we will not give the entire money, because if you give the entire money initially only, why would the person complete the work? Escalation clause, if the price of the commodities increases, this particular part is covered by the client. Why should I face inflation on myself? Then profit for incomplete contracts can be calculated. It is anticipated that this is the total amount of cost that we have included. So the profits and all should be recorded later, but losses should be recorded right away. Then comes process costing. Everyone, for example, paper making. This is done through multiple processes. So you have to see each and every process, and how much units are produced at each level has to be calculated. And here we use weighted average, standard costing, and first in first out. Even LIFO is also a part of it. Last in first out. That happens in terms of bakeries a lot. You know, that is covered under process costing. That means things goes under multiple processes. So there can be normal loss. For example, petrol. Petrol, when you are transporting somewhere, it basically changes. It is a normal loss. It gets evaporated. Otherwise, due to fire and all, it becomes it gets burnt up and all. It's an abnormal gain or abnormal loss. We find out the number of units that we have and multiply it with the percentage completed. Sometimes we do not complete the entire work, so we will record the cost accordingly. Then we have joint products. For example, if I am making sugar, I have the sugar cane juice which is used. Sugar, the byproducts is there. That means the bagasse which is there, that is the extra waste which is created out of it. We make something out of it. Joint products is there in terms of crude oil. From crude oil you make what? From crude oil you make petrol, you make the gas there, and the natural gas, and even the diesel is made out of it. After beyond a point, all these three things are made. That point is called split off point, beyond which we can identify the cost of each petrol, diesel, and natural gas separately. Then there is something called batch costing. Let's make Kinder Joy blue wala. Let's make Kinder Joy pink one. In this case, that is called batch costing. You make a particular thing in a lot. Service costing is there in terms of your services. For example, dental or the spas and everything, they have service costing. You provide service and you charge accordingly. Transport companies, hotels, hospitals, they do that. Next part is your standard costing. Standard costing is the costing which talks about the area of standards which are set. One is basic, which remains same all the time. Ideal is what we should have, and currently is basically what we are following right now. Attainable matlab we can achieve it or not. Attainable standards. Variances can be material, labor, or overhead. When we look forward towards the cost price, material price changing, it affects your pricing. But what if I am supposed to use 2 kgs, I use 4 kgs of material? It is covered under material usage. Same goes with labor rate. If the rate per hour changes, it's labor rate variance. And when the number of people who are working in one particular area, are they wasting time or something, that is labor time or efficiency. Under overhead, this is your overhead variance. Direct labor, direct material, and direct expenses are part of direct production. Remaining is overhead expenses. The expenses which remain fixed are called fixed overhead, and variable overhead are those where which changes with the production. Then what do we do with all these variances? We have to record it in costing P&L account, not normal profit and loss account, everyone. And yes, we have to see whether it relates to finished goods, WIP, or the sales there. And we have to transfer it to reserve account. That means these are the losses that we are ready to work upon. Then marginal costing is your variable costing. The other name of marginal costing is variable costing, which talks about this area. First is cost, volume, profit. CVP analysis. It says, first of all, write your sales. From sales, remove exclusively your variable cost. You will get your contribution. From your contribution, remove exclusively your fixed cost. This is your profit of your business. Everyone, when we talk about break even point, this is the point at which we are able to cover all the cost but no making of profit. The formula is fixed cost is covered from your contribution. That means beyond contribution, once you have covered fixed cost, this becomes zero. That is your break even point, the point at which your production cost is all covered but there is no further profit earned. Then we have the contribution. Contribution is sales minus only the variable cost. PV ratio, profit volume ratio, the formula is you write your contribution, contri upon sales is your PV ratio. Margin of safety is once you cover the break even point, matlab no profit, no loss point is achieved, then you start making profit. That is your margin of safety. Absorption costing is the costing which is based upon traditional method. Whatever elements of cost are there, you give allocate cost to everything. While activity based costing is the costing which is based upon purely you do an activity, you allocate it to that activity. So in this case, you have fixed plus variable cost. The cost which varies with production, variable cost, which does not vary is called fixed cost. Then the last topic is budget. Anticipation, you choose a specific amount of money which is to be forecasted for future. You define every, when all the elements of budget, your production, sale, advertising, marketing, everything is defined in one budget. It's called master budget. When production and selling and everything is separately defined, it's called functional budget. It can be fixed, it can be flexible. Fixed is basically for one particular unit. Flexible matlab you are having multiple units, talking about 10,000, 20,000, 30,000. You prepare accordingly. It can be basic, which has got all the basic knowledge only. Current means which is for today's information. It can be long period for more than it is for 1 year, or short period for maybe quarter. Implementation, you can have charts, and there is something called budget center. They are working exclusively for creating the budget. You have a manual, just like you have manuals for usage of your, when you create a toy or something, you're using a toy for a game or something, you have a way of doing it. Same thing goes with budget. For budget, you have committees which sit down and prepares the particular budget area. There is someone who has to control, so there's a controlling, and you report these budgets as well. Everyone, when we talk about zero based budgeting, your previous assumptions for budgeting has failed. Why should we take that last year I had 100 rupees of material, so this year let's add 10%? Maybe the scenario has changed totally, so use new methods and new create from scratch. That is called ZBB. No more previous base, you start with another base, but you shouldn't be doing it every single time. Just one time it happens and then you have the base ready. Then you have program budgeting. That means we are looking forward towards the program for a specific time or a specific area you are talking about. Then it is program budgeting. And then we talk about the performance, whether the performance is going up or down, and whether it is going good or bad, and how 90% efficiency is there, 80% efficiency is there. When we talk about that part is covered under performance budgeting, everyone.
Okay, so thank you so much for watching, everyone. I hope this particular area gives you the idea of the entire topic of our the gist of the entire syllabus there. And if this was helpful, then please go ahead and like the session. And everyone, all the very best for being there. Thank you.